Lululemon reported earnings, and they were quite something to digest. Because when the numbers were released, the stock dropped an immediate 10%. But as we learned about what happened during the earnings, the stock rebounded for a quick 18% back up. Well, so what do we make of these earnings? Well, in my opinion, there were three main challenges. These were number one, maintain growth, and that means keep year-over-year positive. For the Americas, the year-over-year growth had to be positive for the Americas because this is where we saw a lot of questions regarding how the stock was doing or how the company was doing. Then we had show strength. Now, show strength meant show strength in China because this is their main area of growth, and hold their guide as this was expected to cut. Now, then we had number three, show confidence. Now, showing confidence was done through having big buybacks. Show confidence in your company. Show confidence in that the stock is undervalued. And increase the authorization. What I wanted to see was that they did such massive buybacks that they just had to increase their authorization. This is what they did last quarter, and what I was hoping to see this quarter as well. Now, these were the three main points I was looking for in this earnings report. Then there were some other side things which I alluded to in a prior video, but these were the three main targets for me. So let's go through the earnings, see what I thought of it, and see what I expect for the stock to happen next. Because, well, the stock reaction was very mixed. Like I already showed you, the stock went down an immediate 10%, then bounced back to being up 6%. And then during the trading day, it just ended flat. It just zigzagged a bit and it went nowhere. So that was very weird price action. And, well, I will explain to you what I think happened at the end of the video and where we're going. Now, in order to show you the earnings, we are going to Koifin, which has a very nice overview of what the numbers were that Lululemon posted and how these compare to what analysts expected. So what we are going to do is go to Q2 2025, which is a bit sideways. It's this quarter. I zoomed it in slightly and I'm just gonna show the expectations. So what we see, first of all, is that we had revenue of $2.371 billion, but analysts expected 2.408. So we missed on revenue. However, this miss was widely expected and more or less priced in already. If we then look at the gross profit, we see $1.413 billion of gross profit, while analysts expected on average 1.39. So they beat on the gross profit, but missed on the revenue side. Now, that is some negatives, but that's also a huge positive because that means that the gross profits, well, they stayed relatively well. Now, furthermore, we have the EBITDA, not really the most important number in my opinion, but the net income is. So net income was $393 million. Analysts expected $369 million. And then if we continue down, we have adjusted EPS of $3.15, where all the expectations was for $2.94. To give you a maybe insightful insight, the highest expectation was for $3. So they did do a very nice beat on EPS numbers. Although these earnings were not particularly about this quarter, but more so about the coming quarters. Because, well, we know Lululemon isn't really in the best place with their business model right now. So we were looking to see if we could get some additional information about how the coming quarters would look like. So then continuing, we have cash from operations, $461 million, but that flows into the free cash flow, which is way more important. And this was $348 million. Now you can see that the average was also $348 million, but I don't know how truly reliable that number is. And what we see right here is the gross margin of 59.6%. And the average estimate was for 57.71%. So they beat the gross margin by quite a nice amount. Even the highest expectation was for 58.1%, while they came in with 59.6%. So they did really well on that gross margin. Now, we also had a net or adjusted net margin of 16.57%. And if we then just go all the way down, we can see how these numbers compared to a year ago. And we can see that revenue, that's quarter over quarter. Here we have year over year. Revenue year over year increased 7.33%. That's not very high, but we'll take it for now. Gross profit increased 8.79%, EBITDA adjusted 5.93%, EBIT adjusted 12.72%, net income adjusted 15%, so 15% net income growth on 8% revenue growth. That's quite a good number. I'd say that is very positive, was it not for the issues the stock is having right now. Now, the adjusted EPS increased by 17.5%, so that is even way better. And we might get a little hint about what happened there. If the net income increased by 15%, but the EPS or the adjusted EPS increased by 17.5%, there we might get a little hint about buybacks. Maybe there's some other things going on. With the adjusted numbers, they take out one-time expenses, but it may hint to some positive signs. Okay, now then, here we can see it once more from the actual SEC filings from their 10Q. And most of these I already told you, but we see the net revenue. It increased 7.33%. And for the first 2 quarters, it increased 8.78%. We saw the cost of goods sold increase by 5.3%. So that is lower than the increase in revenue. Very good. Gross profit increased 8.75% year over year and 9.71% for the first 2 quarters of this year. So we saw the SG&A number increase by 6.78% and the net income from operation or the income from operation increased by 12.72%, while for the first 2 quarters of the year, this is only 10.47%. So this quarter was better than last quarter for income from operations. That's some positives there. Now the net income, 15.02%, like I already told you, and the diluted earnings per share, they increased 17.54%. Now the important thing is what's below it, and that's the diluted weighted average number of shares outstanding, and they decreased this year over year by 1.89%. That means that they did a lot of buybacks, and they really did a lot of them. I will highlight how many exactly at a later part, but they did do a lot of buybacks. Now, what else do we have? The net revenue per region and the income from operations per region. And if we look at the net revenues for the Americas, this increased by 1.26%. Basically, China mainland increased 34.01%, and that is really important because China mainland is where this company sees a lot of its growth coming from in the coming quarters. And then we have the rest of world segment increased by 23.73%. Also, very good growth numbers, but in prior quarters, we've seen that the margins in rest of the world segment aren't really as good as in China or the Americas. The income from operations in the Americas increased by 1.34%, so slightly more than those revenues, but I don't know how much we should look into it because it's still basically flat. China mainland, 42.65%. That's really impressive. And we see the rest of the world increase by 44.27%. So that is also very good. We see the income from operations really take big steps in all the other segments than the Americas. Okay, so then looking at the earnings call, there were some really important comments made, and I just want to go through them with you. But the important notes from Calvin McDonald, the CEO, and Megan Frank, the CFO, I will simply highlight because going through all of it just takes way too long. And after this, we will look at the share price of the stock, what the chart looks like right now, and what I think will happen next with the company, the guide, as well as with the stock price. Now, if we look at the comments made by Calvin McDonald, the CEO, we saw a strong opening of the earnings call. He showed that management understands the need for transparency, and I thought that was really important. This is what he really started the earnings call with. Just showing he understood. We are not doing all that great. We are seeing difficulties, and we need to address those. And we need to lay out the plan to investors how we are going to all overcome these challenges. And that is exactly what he did. And that is really positive in my opinion. Now, we saw the US revenue basically flat, but we went through that. They improved inventories for smaller sizes through Q2. This is also, again, really important because this was one of the main points from Q1. Now, they said they had a lack of newness, and this is expressed in colors, prints, patterns, and this newness was below historical levels. This was also the case in the last quarter, but also right now. Now, Calvin McDonald expressed to be positive about the new structure ever since Sun Tzu left, with a closer collaboration between the merchandising and design departments. Now, they are also fast-tracking new designs, however, this will take some time, and the newness is expected to be back to historical levels no later than spring 2025. So that is really important, and this was really good that he did this because he laid out a timeline of what we can expect. Now, he admits to being disappointed in the women's category, and especially with how they executed on it. But he is very positive about the men's category because they increased their market share, and this was also what was driving some growth. He also spoke on the breeze-through leggings. You know, the leggings that they pulled off of the shelves? He was, well, positive about the fabric. The fabric seemed to get really positive reactions. However, the design did not. So the fabric will return, but just in different styles. So they are lowering the guidance due to, well, partially a holiday season, election uncertainty, and this was offset a bit, but the last part is what I added to it. This was offset a bit by ongoing improvements in newness in the second half of 24, with old levels of newness in 2025. Now, what became clear later in the call is that they really guided the year to continue like Q2. And the improvements in newness were not taking into the guidance. They just said, okay, we're going to continue from Q2, and we're just going to assume that the year is going to progress like we saw in Q2. And whatever happens that improves this, well, that's just an added bonus. But right now, this is what we are working with, and this is how we are guiding and what we are expecting and what you can expect from us. But if we are improving on our business, then that will come on top of guidance. But right now we are seeing this. So then it was time for Megan Frank, the CFO. And what she said was also very important because the markdowns were flat year over year, and this really exceeded expectations. Now, the gross margin was 59.6%, like I already showed you, but they did $580 million of buybacks at a $310 average. Now, this was in Q2, of course, so this was partly before the drop from $300 to $250 in share price, but they now had $1 billion left on the current buyback program. Now, they did not increase the authorization, but if they did $580 million of buybacks in the previous quarter, then I can only imagine how much they are doing now because I don't really expect them to do many less than they did in the last quarter because the share price is even lower and the stock is even lower valued. So they should increase their buybacks even more, and they should really hammer into that $1 billion authorization that they have, because these are just really good prices for this stock if you assume that it's not going to be the next Under Armour. Now, they are now estimating a $10.375 billion to $10.475 billion in revenues, and this came down from 10.7 to 10.8 billion. So they lowered their guide a bit, but not all too much. And they are now expecting EPS of $13.95 to $14.15. And this was $14.27 to $14.47. Now, if we take a share price of $260, after the Friday close, it was $259, so 260 is an easy round-off number. And we divide that through $13.95, we come to a EPS for 2024, basically, fiscal 2025, of 18.64. That is really low. But why is it important to note that they slashed guidance? Well, because the stock basically went nowhere. They slashed their guidance and the stock stayed flat. That means that this was already priced in. This was so widely expected that the stock dropped before they released these numbers. So this is just really good news. Basically, they are doing as expected, but not any worse. Because normally when you slash your guidance, that's painful for the share price, to say the least. So then we had the Q&A part. And what we noticed, or what I saw, was three main good questions, which highlighted most. And in the first question, they were asked if it was a macro slowdown or a lack of execution. And what they said was that they see the slowdown as their own fault. They are really woman focused, well, basically worldwide, and they didn't bring enough newness. Calvin McDonald also says that he thinks most should be within Lululemon's control. So I like this very much because he's not pointing to, oh, we are the victim of a bad macro economy. We can't do anything about this. He says, no, this is our fault. We didn't execute well enough. And we can improve on that, and we can improve this scenario. So Janine Hoffman Stichter asked about the breeze-through leggings. And the answer she got was that this is an exciting new fabric, which was made for hot yoga in Asia Pacific. And it will make a comeback, possibly in 2025. It wasn't planned for 2024, that's too short of a time frame, but possibly in 2025. And it highlights seasonal updates to the Align franchise. And this is meant by newness, and more of it is coming. Seasonal highlights in colors, in prints, in patterns, just so that the Lululemon customers can come to the stores and see new things that they don't already have, and differentiate itself well enough from other leggings, of course. And this is just one example. Now, Lorraine Mackey's asked about the possibility of accelerated newness, as newness is expected to be back on old levels in spring of 2025. And the newness should gradually improve to Q3 and Q4, but back to old levels in spring of 25. And like I just said, there is no impact of the, well, some improved newness in the guide. So what is meant by gradual improvements in newness through Q3 and Q4? Well, they are fast tracking a bit of it, and as much as they can, but these are really large orders, so they can't go what's ordered for spring 25 and bring that all of a sudden in within a month. That's of course not logical, they can't do so. But they are trying to push as much to their producers and to their manufacturers and get as much newness as they can through Q3 and Q4 already. But it will take time. Okay, so what to make of this chart? Well, what we can see right here is that the stock went up on the earnings day. This is the earnings day. The stock went up slightly and decreased a bit, but at the end of the day, it went nowhere. And like I already said, that is really quite impressive for, well, a stock that slashed their guidance. So once again, most of the bad news is already priced in. And we will have to look at what is gonna come forward in the next quarters. And I think the management and the executives laid out a good plan forward. I think they were transparent about the issues they were seeing and about what they are gonna do about it. But of course, this is not a one-day turnaround. This takes time, and I think they showed us some light at the end of the tunnel. But we will need to see how the quarters are going after this one. And I think that we are seeing that in the share price right now. The stock went up a bit, it went down a bit, it went up a bit, it went down a bit. It basically was in doubts of where to go. And I think this will go on for some time. I don't know if the stock will go lower than the prices we have seen. I also don't think it can't go higher. Once again, I think we've seen some positivity, but analysts are now gonna see what they think about the progression of the stock or of the company. And if we then look at the three main things I wanted to see from this earnings call, we had maintained growth. I mean, they had growth technically, but not really, right? It was basically flat. So it wasn't as if they really had growth. Then we had show strength, and show strength meant show strength in China, and they did so. So that was really good. But hold guide as this is expected to cut, they did it. They got their guidance. Okay, but they didn't cut it that bad. And the stock didn't react that negative to it. So they showed some strength, I guess, but not as much as I wanted. Then we had show confidence. And this was going to lead to big buybacks and an increase in authorization. Now, they did have really big buybacks. They had, I think, a $1.3 authorization standing or outstanding, or 1.5, I guess, because they did $580 million in buybacks and they have 1 billion left. But I think they should keep doing this because the share price, as low as it is, at a 18.64 forward PE for the 2025, fiscal 2025, well, guide, basically, low end of the EPS guide, they should keep really increasing and hammering down on those buybacks. Because I don't think this company is gonna do that bad. I think they have been lacking newness, they have been seeing shifts in their business model with, for example, the departure of Sun Chu, and they are now adjusting. And this is taking a bit of time, but they have plans. They see positive things about it. And I think they will manage to get it in the right direction. But it will just take a bit of fidgeting on how to do so. Now, once again, the coming 2-3 quarters will be really important in that story. And as long as this company is executing how they predicted they are, then I think Lululemon might be a really interesting price at this point. But it is one that will require very close monitoring. Now, let me know what you thought about last quarter's earnings release. And if you've learned something from this video or you thought it was interesting, please make sure to hit that like button and subscribe to my channel, because I try to make as many videos as I can like this, and I try to upload at least 3 times a week. Now, that is difficult. It takes a lot of time, but I do try to get that consistent 3 videos a week out. So if you appreciate that effort, please make sure to subscribe, because it really helps my channel with the algorithm. Thank you for watching, and I hope to see you in my next video.